All right, hello, my name is Gavin McGuire. I'm a director with eHedger in Chicago, and this is our commentary for the upcoming USDA World Agricultural Supply and Demand Estimates Report due February 10th. Overall, we think the main theme that we need to be looking for is essentially what's been going on the demand front and whether or not the USDA has made any adjustments to that effect. For the corn market, we're pretty concerned about the pace of ethanol consumption and feed demand. Both of those are two of the major pillars for U.S. corn demand, and we think that they've both been eroded fairly aggressively lately. And so we'd be concerned about both of those markets, both of those aspects of demand being trimmed a little bit in the upcoming report. Countering that a little bit recently has been the export pace. We've been exporting more than 1 million tons for the last 2 weeks in a row, and certainly that's a healthy sign of global consumption. We'd like to see that continue, but we're wondering whether or not that one peg is enough to withstand the overall trend, which we think is higher inventories. So feed demand and ethanol consumption are both softer, and we think that will outweigh the decent pace of exports lately. We think that will contribute to a slight bump in corn estimates, corn ending stocks for tomorrow. Looking at the soybean market, overall, I think a lot of attention has been focused on the global side of things lately, particularly how has Argentine production held up given the terrible weather conditions they've had there. We think obviously we need to be braced for a trim in production from that country. But we're not entirely sure it needs to be all that aggressive. We have had some rains lately that will have helped the crop somewhat, but certainly a lowering in output there should be expected, and that will probably feed into a firmer tone for us here in the U.S. That said, the crush pace within the U.S. has been pretty abysmal, to be honest, and we think that that's not a great sign at all. And although exports have been fairly decent, we think a cutback in the crush should be anticipated, and we think that will offset any increase in exports, leading to inventories of beans fairly flat, we think. So we would anticipate to be at around 200 million bushels to slightly under that level. On the wheat front, we think there's just a pretty set of mixed numbers to be anticipated. Obviously, the southern hemisphere growing season is again going to be a highlight, but on the usage front, we haven't been seeing anything to get excited about, and so we think overall the average guess for estimates is about 650 million bushels. We would expect to see about that as well. So pretty much flat on the month in terms of ending inventories, but the trend is not lower, and that's so, again, price-wise, we're probably not anticipating all that much. So overall, we think that the focus is going to be on Argentina. That'll be the main numbers that people will look at, but domestic usage of corn and beans need to be looked at closely. And overall, we're not all that excited about it. So we would not be surprised to see inventories of both corn and beans end slightly unchanged to maybe a tiny bit lower, but nothing to get excited about. So thank you very much. Have a nice day. And again, my name is Gavin McGuire from eHedger. Bye-bye.